If you want to become an intelligent investor, then you've landed just at the right channel. With this, let's start the video. I think now, because IT is one part of the large cap index, now the second part of the large cap index is banking.
Sure.
And we have seen that who's and who's of the investing world, it's a consensus contra. Let me put it that way.
Yeah, that's interesting.
That's an interesting take because every interview watch बैंकिंग मतलब
Yeah.
कंसेंसस कॉन्ट्रा बना हुआ है इस टाइम पे बिकॉज एवरी वन थिंग्स कि बैंक्स अभी आप कॉन्ट्रा जा सकते हो उसमें वहाँ पे वैल्यूएशन कम्फर्ट है
हाँ.
ग्रोथ रेट्स का वी डोंट नो बिकॉज निम प्रेशर आ सकता है
Yeah.
बट व्हाट इज योर टेक ऑन द बैंकिंग सेक्टर एंड व्हाट डू यू थिंक कि हाउ इज दिस सेक्टर पोजीशनड एज ऑफ नाउ
Yeah. First of all, I take objection with the fact like there's a difference between valuation and value. Low valuation doesn't mean good value, and high valuation doesn't mean bad value. Like, let me give an example. If I'm 15 times earnings and I'm growing earnings 2% a year, and if I'm 25 times earnings and I'm growing 20% a year, what is good value and what is bad value? The 25 times earning stock, in my opinion, is the more desirable stock to own, but it's expensive. And we were just told that PE multiples matter. That's why you have to look at large caps. So let's talk about that in the context of banking. So there are a few popular cases for banking. I'll just try and attack them one by one. The first one is, oh, look at these banking stocks. They have derated dramatically in the last 1, 3, 5, 10 years. And the classic examples I keep hearing are HDFC Bank, Kotak Bank. What is worth asking is, how have things on the ground also changed from 10 years ago? So first, let's look at how that has happened for these two banks. 10 years ago, how many banks did 15% ROE? I'm talking about Nifty 50 banks. Two banks, HDFC and Kotak. Today, how many Nifty 50 banks do 15% ROE? Until the IndusInd controversy, everyone. HDFC, Kotak, ICICI, Axis, SBI, Bob. Indian Bank, I think Canara Bank, all the large banks do 15% ROE. What is the competitive differentiation in terms of capital efficiency? There is none. Now, you can argue ICICI Bank does 17, this guy does 15. I get it. So, you obviously deserve some premium for every extra percentage point of ROE. But I think 10 years ago, no one even did ROE above cost of capital. So now if you have to buy banks in India, you're an FII. India for you is a foreign emerging market. You have one bank which has grown 20% for as long as you can remember. And it has a good ROE. And there is Kotak and he's smaller and he's growing. Then you have 5 other banks where there's no ROE, but yeah, maybe in 2 years it will turn.
right
What are you going to buy? You're going to buy these two banks. Second thing, growth rates. How fast was HDFC Bank growing 10 years ago? I think 25% a year.
right
And 20% a year was the meme. HDFC Bank
20% की एफडी
20% तो core में भी हो जाएगा.
वो मीम दैट 20% की एफडी
Exactly. Kotak was growing also that fast, if not faster, because he was small.
Right.
How fast are they growing today? Kotak is growing 1.5 times system, so still faster. How fast is HDFC Bank growing today? I think in the last quarter he grew 1% sequentially. Why is he growing slower? Two reasons. He's become too big. He's 15% of system. I mean, this is the law of large numbers. If you compound it 20% for forever, you can become the system at the end. Somewhat that has happened. The other thing is RBI. RBI said that credit to deposit ratio has to be 80, and you have merged with HDFC Limited. You have to replace the deposits and you have to grow deposits in excess of loans. So what's the solution? Either you grow deposits 30% a year, but you're already pretty big, so you can't do that, or you cut your growth rate. He's done both.
Right.
Okay, so now your growth rate is gone. Your ROE differentiation versus everyone else is gone. 10 years ago, you could have made a penetration story. We discussed this in consumer. You were 1.5%, 2% of system credit. What are you today? 15% of system credit. So can you make a penetration story? Maybe, but it's not as compelling as it was. The third, which is the competition which doesn't even meet the eye, which is 10 years ago, how many conglomerate NBFCs had scale? Even Bajaj Finance didn't have scale.
Yeah.
Chola was a small cap.
Correct.
How many conglomerate NBFCs today have loan books of 50,000 crores or more? It's a pretty high bar, but I'll list it out anyway. Bajaj, Aditya Birla Capital, Chola. Poonawalla wants to get there in 3-4 years. I think Jio has pretty big plans. So the competition isn't just from PSUs that are well run. It's also from these conglomerate NBFCs that didn't exist. So your growth is not as differentiated as it was. Your competition is sharper. Regulators not in your favor. And you have like 10 companies that are going after your blood. And then let's add more. Leadership transition.
Right.
You had Mr. Aditya Puri at the helm for 25 years, then you had a leadership transition in HDFC. You're going through the same thing with Kotak. There's been churn. I think the Federal Bank CEOs come from Kotak. So it's not even like the leadership is stable. So if I didn't tell you the name of the company and I just gave you these 5 stats and I said, do you think derating is warranted? It would be hard to argue that it's not warranted. So sometimes I feel like when these comments are made that, oh, large caps, because the P multiple is lower than, it's 19 times, that's the long term average. That is a very sort of top down view, which doesn't take into account the bottoms up reality. I mean, P multiples are an output, but the business outcomes that they are driven by is the input.
Right.
You have to also look at that. So for us at least, we have been saying, yes, there is value in financials, but the part of the market that actually Persistence Capital owns, and by the way, none of this is a disclosure investment recommendation. We'll change our mind at any time. We could sell the stock. This is just for illustrative purposes. Is what we like about banks is the fact that they have low cost of funds, so they have the ability to pick borrowers. What we dislike about banks is practically everything else. We don't like the fact that they have to raise liabilities. It's really hard to raise liabilities in a country like India in a liquidity constrained environment. So, what is the closest proxy to banks? Conglomerate owned NBFCs. AB Capital, AAA rated. Bajaj, AAA rated. Chola, I think it is on the way to getting AAA rated. I'm pretty sure it'll get there, given their track record. So, what advantage do they have? They don't have a credit deposit ratio that they even care about. So, they can grow faster, and they have over the last 1 year. B, they don't actually have to do the hard job of raising deposits. They actually just raise money from the banks. And they can make the banks fight with each other because they're all AAA rated and they have great track records. So that's the second thing in their favor. The third thing is they don't have CRR, SLR ratios because they're not a bank, they're an NBFC. So their ROEs are structurally higher. So you have the ability to pick borrowers as well as a bank, or close to as well as a bank, but you don't have the headache of raising liabilities. You don't have the headache of managing a CD ratio. You don't have the headache of dealing with a regulator. That's obviously a lot more sensitive with banks because banks are systemically important institutions. So I guess like that is the part of the value chain that we find interesting because it doesn't have asset side issues that a subprime lender like microfinance or something could have. Doesn't have the liability side issues that a bank does. And I guess like yeah, people point. I guess one pushback that you could logically make after hearing this is where you say all this, but banks have worked. But you know what's worked better than banks this year? Bajaj Finance, Chola, LTFH, AB Capital, all 4 stocks I think are actually up this year. No exceptions. And Bajaj and Chola obviously the best performing lenders here today.
And I think just to add to the point, a well run large cap bank
Yeah.
at best will have a 15-17% ROE.
Yeah, at best.
And in the very long run, your returns of the stock that you hold should converge with the ROE of that particular
Yeah.
business.
Yeah.
So that is the type of expectation should ideally one should have if they're able to grow.
Yeah, exactly. If they're able to grow, but they're not even able to grow. In fact, here's the crazy thing. They're considered expensive, but I think we did this analysis at the start of the year. There were only 2 stocks that we could find with a market cap north of 1 lakh crore, which are not cyclical, whose PEG was under 1. Chola and Bajaj Finance.
Correct.
It was not even like HDFC Bank, everyone thinks is cheap, but actually the PEG might be like 3 times.
Right. So that's the interesting part. I think a lot of unintended consequences kya hua after this merger of HDFC happened.
Yeah.
It also led to deposit wars.
Yeah.
Right.
And they're not ending. And the other thing that's happened is there's also more of an equity culture in India. And by the way, this is what you get if you have high inflation. If you have high inflation, your FD doesn't make you any money. So
Right.
if the complaint from the banking ecosystem is that we are not able to raise deposits, that to me is I don't know how to solve. I mean, that's a tough spot to be in, but it's pretty rational on the part of the depositor to not park deposits because they're not making anything after inflation. So who is capturing the benefit of this zero inflation return? It's the banks. And if you believe after COVID there has been enhanced investor awareness, why would people sign up for no returns after inflation?
Right. Right. ए पिछले 6 to 9 मंथ से तो लोगों को लग रहा है कि एफडी अच्छी थी वैसे तो.
हाँ, वो that is true, but FD, but they could have put it in fixed income also.
Correct. Just kidding. Just
No,
We believe that financial literacy is a fundamental right. तो इन दिस सीरीज ऑफ 7 क्लासेस फॉर द नेक्स्ट सेवरल ईयर्स व्हाट वी आर डूइंग, हम आपको बेसिक्स सिखा रहे हैं स्टॉक मार्केट के कि व्हाट आर स्टॉक मार्केट्स. इसके साथ साथ व्हाट वी आर डूइंग इज दैट वी आर टीचिंग यू द बेसिक्स अबाउट फंडामेंटल एनालिसिस, एंड इसके साथ साथ फाइनली व्हाट वी आर डूइंग इज अबाउट द बेसिक्स ऑफ टेक्निकल एनालिसिस. एंड द ब्यूटी ऑफ द इंटायर थिंग इज दैट द इंटायर कोर्स इज डन इन 7 क्लासेस. कि हमको बेसिक्स ऑफ स्टॉक मार्केट, बेसिक्स ऑफ फंडामेंटल एनालिसिस एंड बेसिक्स ऑफ टेक्निकल एनालिसिस, तीनों चीज़ें आपको 7 क्लासेस के अंदर समझ आ जाएंगी. And the best thing about it is that it is totally free of cost because we believe in adding more value versus the price that you pay. And इसके साथ साथ post completing the entire classes, you will also get a certificate. So see you inside the course. So if you loved this video and you had a differentiated business insight, then do subscribe to this channel, and you can also follow our main channel of SOIC. Thank you so much for watching it.